Welcome, everyone, to CoinDesk's inaugural first ever webinar. After this summer of ICOs over now, ended symbolically with some news out of China on the last day of the Labor Day weekend. Here we are asking the question, what's next after this summer of ICO mania? And we've got a great lineup here. We've got Bloq, who has sponsored this webinar. They deliver enterprise-grade technology solutions to leading companies worldwide, including Deloitte and Microsoft. We've also got Vaughan from Tierion. Wayne has pursued an ICO over the summer and also went the VC route a year ago. And we've also got Bogart from Blockchain Capital. Spencer is one of the inventors, a pioneer in this whole new buy side of tokens. He's been writing analysis on this stuff since 2013. So we've got a great lineup here. And we're going to get started right away with a sort of, even though we're talking about what's next, let's have a little bit of discussion about how we got here. We're not going to spend too much time on it, but it is important to lay a bit of the foundation. So I'll start with Roszak, Matt from Bloq, one of the co-founders. Hi, Matt.
Hey, Nolan, how are you?
I'm great, thanks.
Well, yeah, just to kick off. Just to kick off your initial question, how this all start. I think it all fundamentally started with Bitcoin, and the attributes of peer-to-peer, decentralized, encrypted, open source. You could verify code. And really invented a scarce digital asset and rewards you for the contributions you make to a network. And in the case of Bitcoin, you mine, you provide security, you get compensated, and that enables that secure value transfer network. So Bitcoin started this Cambrian explosion of innovation and financing in many ways, and so that's part one. And part two is it's democratized access. It's just open, permissionless, global, and one can share in the appreciation of a particular network. So yeah, I think it's a fundamental shift in tech and financing and open source. And you go back to maybe an example of Linus Torvalds trying to build Linux, and that takes time. That takes a lot of energy, a lot of capital, a lot of developer attention, and here some of that's accelerated in many ways. Some of those innovations are brought to market a little quicker when you have this risk-reward dynamic by offering a token and being able to finance a 10-year protocol or application or network or even economy where you can provide that capital to start building that. And when investors or participants have a token to buy in and share and even speculate on that, provides for something that's been unprecedented before for open source.
And I really like the way you put it, a Cambrian explosion that really puts the sort of historical aspect in context here. This is a big change. This is revolutionary. This is something that is totally new and happening all at once.
Yeah, the internet people got really excited about putting pet food and shoes and office supplies online. And here, fast forward, you've got way bigger form factors of currency and identity and land titles and on and on. And so people see that and want to build that and want to be a part of that.
And so what I think you're saying too is that ideas have never been so close to the market. And Wayne, someone who's been in this industry now since the very, very beginning, you even competed in CoinDesk's original hackathon at Consensus 2015 and won with Chainpoint. So you've seen a lot of this stuff. Now, ideas being close to market is one thing, but the infrastructure that's been built out from Bitcoin over the past couple of years has a lot to do with this being possible in the first place. Could you describe that a bit and give a bit of the landscape of the actual companies and products that have been built that allowed ICO mania to happen this summer?
Sure. So this, I like how you're making this out as ICO mania. That sounds like WrestleMania, like exactly. A bunch of men or sweaty large men are in a room beating each other up for the affection of some woman standing ringside. But this is actually not the first wave of these tokens or altcoins besides Bitcoin. There was an earlier wave, and back in that time, if you wanted to create an altcoin, you needed to be able to create your own wallet. The exchanges or places where that token could be traded were very, very limited. We were talking about Cryptsy, which is an old exchange, one of the very few that traded all of these altcoins. And what's really changed over time is that number one is that many, many more exchanges have popped up. There's exchanges all over the world that can provide liquidity for these tokens. And then also there's the ERC-20 standard, which was a standard way of issuing a token on top of Ethereum. It really lowered the barrier, both for being able to create and issue the token, and for people being able to list the token, and for being able to hold the token inside a wallet. Back in the day, you had to make a wallet, you had to do a custom integration with the exchange, and you had to build all of the software to essentially create your own blockchain. That was a tremendous task. It took away from actually having to the ability to create something that created value for a customer, because you worry. It's like back in the early days of the web, setting up your own web servers and building your own data center and all of that. It had really nothing to do with helping you sell dog food online, as Matt put it. And if that's what you wanted to do, that's what you wanted to do. And in this case, in the previous times, people were distracted a lot by having to build their own wallets, build their own blockchain. Now they can, the barriers are much lower and it's much easier, which is a good thing for some cases, but it's also, I think, a bad thing in some cases, because what we've seen is an explosion of companies that they're not even companies. They're groups of people who create a white paper and a presentation and a fancy website, and then they go out and they try to execute a token sale. And it's basically a promise that they're going to build something in the future. By contrast, with Tierion, we launched the company. We raised a round of venture capital, had over 1,000 customers and some major partners, including Microsoft. And we made the decision to go down this path because we thought it was a good decision based on what was going on in the marketplace and what we thought was right for our business. But we were already delivering something, and we had people using a product. So I think that's very, very different. So the fact that the barrier of entry is lower is a good thing, because it allows people to stay focused on creating value for customers, for doing what they intended to do when they started the company. But it's also a bad thing because it allows people who just have an idea and really no code, no customers, no product, no team, to go out and have been able to sell large amounts of these tokens. And we'll see. I suspect that in the future, a significant portion of the people who've gone through this process probably won't ship products or will fall far short of the promises that they made to people.
Mm-hmm. And being in that middle, and this question is for you, Spencer, you mentioned, Wayne, a little bit about seeking VC and then going the ICO route, and that the, let's say, metrics have changed, the ease with which a person can go and pitch an ICO versus the difficulty and barrier to entry to pitch to VC investors is a different landscape. And I think blockchain capital really sits at the middle of those two. So Spencer, if you could give us a bit of an idea of exactly what is different about these two approaches and how you see your role distinguishing these two.
Yeah, so you're right. There's definitely different approaches here. And, I guess before I dive too deep into that question, I'd also, just echo kind of Wayne's comments about, all the kind of technical infrastructure that was built out to kind of support this blooming, emergence of ICO tokens. The other thing that's kind of at play here, the more psychological effect here, is kind of the tribalism that's applicable to these blockchain ecosystems. And we think back to, a lot of people, after they saw this big Bitcoin boom, a lot of people said, I want to catch the next Bitcoin. Everyone went out looking for it, and that's the altcoin boom that Wayne referred to. And, the other big innovation behind kind of the ERC-20 token standard, aside from all the technical benefits of leveraging Ethereum's infrastructure, was just the fact that the community, which was essentially a self-selected community of ICO supporters, people that had bought into Ethereum's ICO, and it increased the value of their investment from anywhere to 10 to 1,000x. So this self-selected community of ICO believers, based on their own success, now had an opportunity to support these new coins and new tokens without abandoning their tribe. So I didn't have to go from Ethereum to something else. I could support it while staying within my own ecosystem, which I think was just an important psychological barrier. We had seen the same thing actually years prior with colored coins and Mastercoin, which became Omni. But I think the timing wasn't right. So I think it was really a function of time there. But to dive into your specific question about how we think about, kind of evaluating, ICO opportunities versus traditional venture opportunities, of which we do both, we really don't reinvent the wheel for ICOs. These are still very much early stage investments. They very much resemble a seed or even maybe an angel stage kind of investment for these token offerings. And so, the team is first and foremost, absolutely. And then from there we kind of go into, how applicable is a token here? How big is the problem that it's solving? Is it getting worse over time? And can the solution get better over time?
Mm-hmm. So, Wayne, you mentioned a bit about how the canned aspect of a token launch, the ERC-20 token, allowed for this proliferation. And Bloq, Matt, you guys have a lot to do with building projects out and being a service that can help these things get off the ground and get wings. Now, we know the first part of the process of launching a token is available to everyone. They can get it right off the shelf and they can go and seek this early stage liquidity. But afterwards, and that's really where we're at now, is that a lot of these projects have to deliver on promises made and they've got to start building out. Now, how do we are able to track code base progress? I mean, where do you go to do this, and how do we know that these companies, that these projects are doing a good job, and where can they go to get these things done and advance these projects?
Yeah, and that's kind of where a lot of these projects are sitting today. So you have, the proverbial two guys and a dog in a white paper raising $100 million on a particular compass or product plan, and quite frankly, a lot of the work is now ahead of them. And what we've seen at Bloq is not only do we partner with some of the largest companies in the world, largest banks, credit card, financial services, supply chain, we also are seeing the emergence of a new enterprise customer on the landscape. It's called the funded ICO. And so, we've partnered with companies like Quantum and Civic and others in helping them build out their scaffolding and their go-to-market. And I think that what's interesting in terms of, and I agree with what Spencer said about, how do you ascertain, a good one versus a bad one. I think team, having some code and the rest of it is all kind of instincts and principles on how to invest. There's also, a lot of, beyond the development, these networks, as they build their protocols, build their applications, the next phase, and this is needs to be thought through, is how do they actually build a network? How do they airdrop tokens? How do they build that community of developers and users and everything else? So I think the dialogue is going to go from funding to building to network development. And they're all extremely important and interlocked in terms of the success of a particular project. And the more kind of insight you have from a team on how they approach those components is I think really important. From Bloq's standpoint, we've been partnering with a lot of well-funded platforms and see the utility in doing that. We're also going to be launching a few of our own projects as well. So, we see this, this continuation of finance and innovation happening, for the next, foreseeable future here.
Mm-hmm. And Wayne,
this is Spencer. Yeah. If I can just jump in really quickly, I just wanted to follow on. I think Matt's dead on there. He's completely right. And one thing I just wanted to highlight to follow on with those comments is that, the difference in kind of where we tend to be looking at things, which is typically a very early stage for a lot of these token projects. Ultimately our goal is to get involved, 6 months or at least before maybe an actual token sale. And in those stages, you have to definitely rely a lot on the team. I think that for people that are looking at, kind of tokens that have already been launched and are looking at their respective networks, there's other interesting metrics to kind of look at here, right? So it's really interesting to contrast with kind of public equity markets, right? So we have a different level of transparency. So on the one hand, tokens have less transparency in that we don't necessarily get, quarterly reports, we don't get financial statements. I think that we'll start to see some of that evolve over time as we get kind of a regulatory framework around these things, or at least best practices within the industry. But for now, that doesn't happen. But instead, what we do have is, tremendous transparency into network activity for these particular tokens. So we can look at number of transactions, we can look at some relationships of these. In some cases, we can ascertain a certain value of the transactions, and then look at, the developer activity, the community activity. So it's very much an apples and oranges compared to traditional equity markets. But we do have, in some cases, increased transparency that, I think that investors would be wise to leverage.
Mm-hmm. Yeah, and we're going to continue to see a lot more, good, bad, and ugly in this space, just given the volume, certainly what China's done with its handbrake, and we see this in, early stage investing every single day in terms of filtering. I think, platforms like Blockchain Capital and Polychain and Pantera and all of those filters and diligence providers, when you see them on a particular deal, it's always good that they've gone through a pacing like that. But, we've seen the same thing in the early internet, oil and gas, railroads. Every major kind of evolution has these kinds of, this effervescence. But you need effervescence to burnish, new technologies and new rails that we're talking about right now. And that, to Spencer's point, there are ways in which you could instrument a particular blockchain on, transactions and GitHub repositories, contributors, all that stuff. And I think over time, as this industry matures, we'll start seeing different, I would say, watermarks to say, it's a great team, great projects. Do you have code? Great. Do you have network participants? Great. And I think the bar over the next several years will continue to elevate in terms of what could actually get out besides, a good idea and a good team. So I think over the near term, the industry will continue to mature.
Something else, this is Wayne from Tierion here, something else to keep in mind is that interest in using tokens is starting to spill outside the Bitcoin blockchain cryptography business-related community. So for example, tomorrow morning, I have a meeting with an existing startup backed by one of the top VC firms here in Silicon Valley, who has nothing to do with Bitcoin or blockchain or anything else, who wants to do a token sale, and they're looking for some advice on this. So I think one of the other metrics is going to be, our companies, just like with every other startup, is a company funded by investors with a high degree of pedigree, or is the team have success in a previous business? I think the moment in time that we're in right now looks very unique because we're so early, but I think that will fade very, very quickly. 2 years from now, we're not going to be the way that you evaluate a startup that is doing a token offering is going to be very similar to the way that historically we've evaluated all new startups and all new businesses.
And that's something that I've
you'll have more information
sort of riffing on.
As Spencer said.
Yeah, and that's something that I've been riffing on for the past few days with what happened in China. I mean, I see that as really a quantity related move. The quality stuff can be tied into, we see the ICOs coming, but then we see all of this professional buy side grow up alongside it. They happen simultaneously, I think, for a reason. And all this new buy side is really inventing, this is a market-based approach to increasing or improving the quality of a lot of these tokens, and I think they certainly will have an effect. They're sort of developing as we speak in real time. I mean, Spencer, you can speak to this. All these key price indicators, you said the transactions and network size are part of it, but there's other signals that are coming out there, and certain projects are able to present the right signals. Like you said, there are some with Team is one of the early ones, and that really is because of the ecosystem and the crowd that's there. But what are some of the red flags that you would see for quality? What's something that someone on the buy side would say, this is just terrible, I can't go near this because of these signals?
Yeah, it's a good question. I think that I don't know that it would be necessarily non-starters for people on the buy side, but things that I would just generally caution people about are maybe projects that have an over-reliance on their advisors, where they seem to be really putting them up front and center. That's not necessarily a bad thing. I mean, look, advisors can be really helpful and really important to a project. And the same comments here apply to any kind of maybe strategic partnerships that are being claimed. It just requires due diligence on these types of these sort of claims about advisors and strategic partnerships, because those are very, very loose terms. And oftentimes in our due diligence processes, we find out that particular people that are listed as advisors don't even know that they're advisors, nor do they want to be an advisor to a particular project. And when we dig into some of the partnerships, we find out that maybe it hasn't been strictly misrepresented, but it could easily be misinterpreted. And when you actually get into what is the nature of that relationship, maybe the supposed partner, maybe a fintech company, a financial institution of some sort, is not even aware of supposed partnership, and it's kind of a off-the-shelf type generic relationship with no particular value add. So I think that those are things to definitely be careful about there. And in general too, when we talked about some of the signals that people are watching for, there are quite a few that are out there. I would caution people not to over-model. So, we see this a lot with people, building really complex spreadsheets that model out all of these variables for a particular blockchain network. At this stage, I think that's helpful context, but you have to be careful with, classic garbage in, garbage out for financial models. So, there's a problem with the quality of the data, and then there's also asserting that these variables are definitely going to lead to some sort of, network value appreciation. When oftentimes the markets, especially within these token markets, can be pretty divorced and, oftentimes rely a lot on momentum.
Yeah, just to underline what Spencer said, there's certain token projects that have, great technical acumen, and there's certain ones that have great marketing acumen. And somebody's got to be wary of the ones that have amazing marketing acumen. And I've seen so many projects that are just really novel technology, really novel approaches, applications, protocols, but not great marketing acumen. And that's sometimes, it distinguishes itself when you see, to what Spencer said, all these partnerships, all these advisors, all this great branding, but, you have to go down to the core of what problem they're trying to solve. Can they execute? What's the distribution model? So that I think is a key piece. And, we're seeing a lot of open source devs, great engineers with awesome concepts that need help in terms of going to market, and everything from the housekeeping of domicile regulatory stuff to token distribution to how they develop the protocol to getting out to do a financing. And so some of those diamonds in the rough is kind of where we think a lot of opportunity resides.
I'd like to chime in. I can list some really specific red flags. And so number one is that if this echoes what Spencer said, if everything is too complicated, then that is a huge red flag, especially if there are new engineering challenges. They say, if somebody says we're going to create a new consensus protocol, and then on top of that, we're going to build this application, and then on top of that, we're going to create this marketplace. That is just a phenomenal amount of complexity, and whatever assumptions they have right now about their business, about the technology, about the competitive landscape probably aren't going to be true, let's say 12 months, 24 months down the road. So if there's a lot of complexity and they're baked into their model technically and a lot of research that needs to be completed, that for me is a red flag. Another red flag is if they're doing something that is like a completely uncapped sale. So if they're going out and just saying, we're going to sell this, but we're not going to say how much we're going to raise or what we're going to use the funds for or anything else, that's another red flag. And then another red flag is if the team and the company publishes exactly what they're going to do and this long roadmap and tells everybody exactly, excuse me, in the marketplace what they're going to attempt to accomplish. Because that doesn't work in the real world. Businesses are built on secrets, on asymmetries of information. I know something as a guy who operated a software as a service company that a lot of other people don't know, and I'm using that information to make my technology and my product better and to gain an edge over other people who would compete with us in the space. And so while transparency and auditability and verification is part of the ethos of this industry, I think teams that just say that, we're going to go out there and we're going to lay everything out and tell everybody what we're doing, might be good for an open source project, but it might indicate that there's no value to the token and that there is no ability for that team to actually build a business or an ecosystem around it. They're just looking to do a science project. So those are three red flags that strike me.
And so Wayne, you mentioned a bit about this capped round ICOs versus the unlimited ones. So we're getting into a subject of structured ICOs, but also the corollary to that is the treasury policy. So we're starting to see, especially a few times this summer when there was a bit of a dip, some of these larger ICOs sold tokens for diversified portfolio, so a bit of cash, a bit of precious metals or whatever. But no professional traders are really behind this treasury management. How important is treasury management as a signaler? Is it something that's going to become more important? And this question's for you, Spencer, because I'm sure you see this in your analysis. How important is treasury policy, and should it be explicit? And what are the best principles going forward for people when they develop these treasury policies?
Yeah, I'm really glad that you bring this up. I mean, it is a really important topic. I mean, I think that it will need to be extremely explicit, and that teams will need to be held to some of these kind of key items over time about exactly how funds are being held. Is it being stored in the cryptocurrency that's contributed? Is it being converted to something, and roughly what percentage over roughly what time frame? Some level of kind of giving investors some idea of what they're being exposed to without also foregoing some opportunity for the startup with giving too much information away to the market. But I think that overall right now, I mean, communicating this kind of treasury policy has seemingly not been important to the market recently. I think it will definitely become increasingly important over time. It's hard for people to care about a lot of these, actually really important details, but they seem like minor ones at the time when things are just, all going up, 2, 3, 4, 5, 6x. Right. So overall, I think this becomes increasingly important over time. And, to echo back to both Wayne's and Matt's comments there, I mean, I couldn't agree more. I wish that on this call there was a way to, stomp our feet or clap our hands or something like that, because I completely agree with those things. If I could, try and throw in something maybe that's perhaps a little more contentious, although I don't know if it'll really be contentious with Wayne or Matt, but certainly with some of my other, buy-side colleagues that are kind of analyzing these markets, is when people think about metrics that are out there, I hear a lot about analyzing the number of transactions on a particular network. And I'm exploring a thesis right now that this is essentially the eyeballs metric of the internet era. Because, a transaction in itself is just a database update, right? So having a lot of database updates is not necessarily a good thing. It doesn't necessarily mean anything of value. I wouldn't throw the metric out altogether, but, I'd just be wary of what you infer about actual underlying value as a result of number of transactions.
Yeah, I just
transactions
echo that. I mean, you have a lot of, you have two flywheels going on a particular blockchain. You have a speculative flywheel, and then you have a utility flywheel of a particular blockchain application. The speculative flywheel, we're seeing firsthand, going up 12x in 12 months. That one is alive and well and vibrant. To Spencer's point on metrics and the utility throughput transaction value of a particular blockchain is still relatively ho-hum. You see Bitcoin as a store of value. You see Ethereum as a crowdfunding platform. Scaffolding is really important for this ecosystem. And then you look at what is happening in any particular application. Right now, we're not seeing a lot of that. Once we do start seeing and calibrating and instrumenting these blockchains and seeing the real health of them, I think the speculative thing will actually be dramatically enhanced. But we're still in the building days of this space. And again, building those network effects takes time and a lot of energy.
So to echo what Spencer said, I think he's absolutely right. But I'm going to add something to that. So one of the things that I did very early on in my career is I actually built one of the first real-time web analytics software packages back in the early 2000s and made marketing automation software. And so in that particular world, people are always trying to look at metrics to see how their business is doing and how their ads are performing, things like that. And I think what's going to happen in this particular space, based on that experience, is that analysts are going to pick metrics that make them look smart, and they're going to track those metrics. Investors are going to pick metrics that make them feel like they're in control and that they're making smart, informed decisions, and they're going to track those metrics. And then startups are going to pick vanity metrics that help them look the best in however they paint a success model for their business. And all of them are going to use those metrics to try to gain a level of comfort over what it is that they are trying to analyze or accomplish or monitor. And in reality, they're all going to be entirely clueless to the point of absurdity. They're not going to have any real insight or any real control. We don't know. The infrastructure around this stuff is so immature, and it's just so early. I mean, even look at the stock market. We have companies reporting information on a quarterly and annual basis. We have a very ossified industry around analyzing that information, and people often can come to opposing conclusions about similar amounts of data. So just because you have information doesn't mean that it's actually useful information. And the story that people tell themselves about the information they're looking at is oftentimes more important than the information itself. So I think we're going to see a lot of analysis and sort of like false confidence over what's happening in industry over the next couple of years, because the quality of the data is so low, and the religion, if you will, that people have about the networks or the approach towards doing this, we've seen it be so strong in the community so far, and I think that's really going to impact those semi-religious beliefs are going to impact the story that people tell themselves about this stuff. So I would caution everybody who's on the call, who's thinking about this industry and looking into this, to try to keep that in mind, that there's going to be probably a false sense of confidence over, at least expressed by experts, over what's going on. For the first couple of years, I really think no one's really going to know.
So transactions passed off as network health when it's really just churning, making it look like a network is healthy, could be presented as a strong technical achievement, but it really is just people churning transactions to leave a false impression, perhaps, that a network is more useful than it really is.
Yes, that is definitely the case, but not always the case. And you have to look and understand things. So in the terms of Bitcoin, things like the market cap of Bitcoin, you can look at that, and that's a fairly good indicator of the health of the network. But then you have to break it down into, well, what amount of that market cap is due to speculation and what amount is due to utility? And then you might want to consider like where the transactions volume coming from geographically. And then you might want to think like, well, what is the velocity of the coins that are moving through the network? Are we doing a lot of small transactions or a lot of big transactions? And if everybody, so those numbers aren't necessarily easy to measure. And even if you have a bunch of people looking at identical sets of numbers, the story they have in their mind about the world and Bitcoin and its future dramatically affects what their interpretation of that of those numbers, and that's part of what makes the industry interesting.
So we're talking about quite mature networks at this point, but bringing it back to a more current, it's September 2017. All of these ICOs have just happened. So beyond networks, beyond transactions, we're still seeing this tech roadmap that has to be delivered. And a tech roadmap could be a strong signaler at this point as to the success of an ICO project and whether it's delivering on promises. So over at Bloq, Matt, do you guys look at these tech roadmaps? How would you distinguish a strong tech roadmap and a strong development course versus one that clearly is half-baked and hasn't been thought through?
Yeah, I mean, I think it's fundamental to open source. While I like Wayne's point on, if you have asymmetry, you tuck it away. At the same time, on some of these broader networks, we're still in much of the infrastructure phase of a lot of the bridges, roads, and tunnels of blockchain. You have to think through what is the kind of the common denominator that's trying to get built out here, and what is the first step in that staircase. And where does it build from there? And that first step has got to get nailed down well, and then you build from there. I think everybody's got a product roadmap right now, tattooed on their arm, and it'll be interesting to see what the next year or two of progress goes against that. I think people will be called out. People will be trying to figure out how to execute on these really big picture paintings that were developed a year or two ago. And I think the market will start to correct. I think the market will be a little bit more pragmatic about what was communicated and what was executed. And so it goes back to the maturity of this ecosystem. And I think those form factors and time and execution will help distinguish that.
And I'm glad you brought up this market-based force that's acting on the quality of these tokens, because, and this question is for Spencer, we've seen audits be a very familiar term for investments for a long time, but the analogous term is starting to get a lot of traction, and that's a code audit. How prolific are these now in a lot of this new buy side? What's the specialty? What's the expertise that goes into this? And how are they done? How do you read them? Is it just a question of getting someone who can break a protocol down and find its weaknesses? What goes into these code audits?
Yeah, you're right. I mean, absolutely, they're of utmost importance. I mean, code and smart contract audits here are really important. We tend to work with experts that specialize in doing exactly that. I think that exercise is mostly about minimizing that left tail, the downside risk of, buggy code that could be, just exploited right away, something like the DAO. That said, I mean, the devil's in the details here, and, even with, rigorous, smart contract auditing, there's always a chance that something can go wrong. I think the team down at Open Zeppelin Solutions is, doing a great job of trying to build kind of an open source, off the shelf, framework of standard smart contracts that have proven successful over time. And I think that's really the only way to be really, really confident in one, is that it's already widely used and there's so much value at stake that hasn't been exploited that we can have some reasonable level of confidence in using that same model going forward.
And Wayne, sort of a similar question, even going back to the beginning of cryptography, or public key cryptography anyway, it's very easy to propose a perfect cryptographic solution to tell a secret, but the whole success of that is based on its antithesis, people breaking code. Easy to offer a solution in a bubble, much more difficult to deliver after it's been tested and broken and attempted to be broken. So how do you deal with that in your own efforts? What goes on over at Tierion to make sure that you know your stuff has been tested, it's rigorous, and it's fulfilling the goals that you have put forward?
So you're really asking two questions. So one is that with the software that we create, we use the same sort of testing practices that all the other companies here in the Valley use to test their software. But when it comes to doing things like issuing the Tierion Network token, TNT, as Spencer said, we relied on work of some partners like Open Zeppelin to be able to audit those smart contracts. And what's interesting is that those smart contracts, based on the ERC20 standard, are a very, very small number of lines of code. Maybe 30 or 40 customized lines of code based on a standard template. So that even that relatively small amount of code takes a significant amount of work to audit. By contrast, you look at our product, and Tierion software is thousands and thousands of lines of code, and we're able to test that code and make sure that it behaves correctly using things like unit and all the other things that people use. But to hand that code to an outside party and allow them to be able to understand it and to be able to test it, that actually might be more work than writing the code itself. So when it comes to testing things, you're usually not seeing that level of testing and verification being done on most crypto projects. Now, some of the startups in this space have started to do something called formal verification. It's where you're essentially creating a code base from scratch and using some very formal and rigorous tools as you build the code base up to formally verify, almost like you mathematically verify an equation that it's balanced, that it works. That takes a lot of time and a lot of energy, and that might be if you're trying to build a new smart contract platform. So like Tezos is doing this. Ethereum, there's been talks about trying to do it for the Ethereum virtual machine and for Solidity, but I'm not sure what kind of progress they're making on that. But being able to, when you talk about audits, it's really people more auditing these smart contracts. They're not auditing the source code itself so much, unless it's an open source project and people are taking a look at the code. And they're not auditing the infrastructure. And in the case of a decentralized system or a distributed system, the infrastructure isn't run by any individual company or organization. So there's another layer of complexity there. So audits are important, but audits, as you hear about them when you look at things in the world, are usually confined to auditing smart contracts for token issuance or for operating a very limited piece of functionality that for whatever reason exists usually on the Ethereum network.
Mm-hmm. Mm-hmm. So, guys, we're going to get to a few questions in a second. We've done quite a bit on quality. I want to do a bit on quantity, so some of this regulatory stuff that's come out in the past few days. And we don't want to get too deep into it. It's a whole nother set of questions. But on your end, is there now sort of how we test in-house specialty growing up everywhere? Is this something that comes along a lot? Let's say, question to Spencer. Do you guys now have the capacity in-house to run these tests quickly? Is this something that you're seeing across the industry?
I mean, we have a rough idea, right? So, I mean, we have a general framework both from going through the process ourselves and from watching, just evaluating a lot of different token projects. I mean, we also recognize, though, that, we're not attorneys here. We don't have in-house counsel, but we do know there's probably only maybe like 4 legal teams that are, really well versed on the space. I think over the next year we'll see kind of a proliferation of that number. But, overall we're going to look for, and, if the token projects that we're working with don't already have one, refer them to one of those kind of top tier legal teams that really has a good handle on the space.
Yeah, I mean, just to add to that, on how we test, hire Dax and Lowell at Perkins or Marco and Patrick at Cooley, and you'll be in good hands. But, just back to the top of what's happening here, regulatory-wise, this ecosystem is moving much faster than regulators. And when you look at a global heat map of what's happening in the U.S., despite all the headlines that everybody reads in CoinDesk, or which I would say U.S. is more of like a 1, Europe is like a 0.5, China and Asia is like a 5x. It's just like even 10x off the charts, and I think that's fundamental to the history of China, where most of the mining, most of the trading lent them to understand the technology better, invest in the software layers, and now is getting pretty heated there with a lack of quality. And so we see China putting the handbrake up the way they have, which will probably create some regulatory arbitrage. We're seeing a few jurisdictions already looking a little bit more innovative, whether it's Canada with their sandbox or the Isle of Man that Brian just put out there, and then Singapore and Switzerland and the like. And so what this is going to drive is a lot of I think opportunity for entrepreneurs and investment jobs and innovation to go to certain geographies that maybe nobody thought of before. Can the Isle of Man, or we see Switzerland being an amazing center of gravity. Singapore is trying to do a lot more, and I think that could shift markets. In terms of how that plays into not only doing an ICO, but exchanges and other form factors for this ecosystem. So it'll be interesting to watch. I think the China ban is creating some opportunity for other jurisdictions.
But the China ban isn't necessarily a China ban. Even this morning, I saw some news saying that one official from China was saying, well, we're not going to ban things indefinitely. We're looking into doing licensing, which is probably what's likely to happen. I mean, this technology is it's out of the box. You can't uninvent it. Yeah. And people are going to use it. And I think that in the United States, we have a very permissive regulatory environment compared to China. So when the SEC made an announcement, they said, hey, look, here's one high-profile bad actor. Here's exactly why what they were doing was classified as a security. Some tokens are not securities, but this one was, and we want everyone to be aware of this, and here's what you need to do if yours is a security. And, oh, by the way, we're not prosecuting any of these people, even though we're saying that what they did was wrong and that people were harmed. By contrast, China, very different government, very different culture. They just come in and say something is banned. And they just decided that enough was enough, and they say it was banned. And then what they're probably going to do, as with the case when they banned Bitcoin and they've banned other things, is they just say stop, and then they say, okay, you can proceed under this limited set of rules. And I think that what we're going to see over the coming 90 days is probably those limited sets of rules. And I think it's just a difference culturally. And it's interesting to see how people respond to this because, historically, I've been pretty skeptical of token sales because there's been, and altcoins and things like that, there's been a lot of bad behavior in this space. But I recognize that this technology is going to exist and that it has some utility, and clearly people are finding that utility. You don't get $1.8 billion of capital flowing in. There's just no utility whatsoever. And so it is going to exist. And I think it'll just over time, the sort of religious fervor that people have over pro-ICO or anti-token will die down, and it will become more practical. But right now, every time one of these news events come up, you have people on both sides trying to ratchet up just to say, see, I was right. You guys were wrong. You're going to jail. Or, this stuff is getting shut down, or everything's going to the moon, and what can be tokenized will be tokenized. And so I think it's important when reading some of these announcements from either the government or from the established press that everybody has a perspective and everybody has an agenda that they're trying to push. And and a healthy level of skepticism, understand, or at least trying to understand what is this news organization or regulatory agency's culture and agenda like, and trying to have just a tempered view on these announcements. Because I think ultimately this technology is here to stay, and a lot of what you're going to hear about it over the next few months is a lot of noise.
So basically copy the experience from the recent capital control crackdown that the PBOC did back in January on the Chinese exchanges, and how it really in the end didn't have a huge effect on Bitcoin whatsoever.
Yes, and then look at other areas in which a regulator in China has taken action and see how those actions have proceeded. And so it's just understanding that, but also look at the reaction on Twitter and Reddit and other places in the news, or even in Bloomberg or Reuters. They get a nice headline that says China bans ICOs, but if you look at the activity that's going on in China, there's still going to be a lot of activity. And then when China walks it back, you're not going to see as many incendiary headlines and as much press coverage because it's not as interesting to people. So all I'm saying is that the take into account the environment, take into account that money perverts people's incentives, and that there's a sort of bizarre culture around this entire space at this time. So when you read things, it's especially about this industry, it's probably important to have a healthy dose of skepticism and to get information from multiple sources and try not to form your own opinions early because you're probably dealing with limited information.
And this question from one of our listeners, Mr. Yang, said, we might find out there are more Satoshi Nakamoto living in China, and that could be a path to future ICOs as well. Hello? Is the call lost?
No, I'm still here. I don't know.
Sure if I understand what that means.
Yeah, just reading basically that the technology is, reading one of the questions here that I got, the technology is the first ICO or the first launch of a coin was done by an anonymous person. We might find out that there are more, or that the technology lends itself to that kind of dexterity.
Well, absolutely.
I mean,
one of the things
you have this technology that's global and permissionless, and I guess today an entrepreneur would just do something and domicile it in Singapore because the China ban, whether it's more consumer oriented or putting a handbrake up to get licensure for exchanges and some of the other market participants makes sense, and it's been in motion now for months and months and months. I think the dramatics over last week were just that. But a lot of Chinese investors that participate in ICOs, et cetera, are on a railroad that's permissionless and borderless. And so it won't have as much of an impact. I think it has headline impact, psychology impact, and it takes a while to feather out in the market. I think more importantly, I think the ecosystem has an opportunity because you have all this disjointed frameworks and best practices, everything from what you mentioned, Nolan, about treasury management to code review, audits, all this stuff, lockups, jurisdictions. There's a big opportunity for this industry to kind of self-organize with best practices and frameworks and disclosures and put a better foot forward. And I think over the near term, you'll be seeing platforms like this develop.
Matt, and it's probably worth mentioning that Paul Stortz, who is a very good friend of mine and an employee of Bloq, is working on a technology called DriveChain, which allows for you to issue these tokens or assets on top of Bitcoin. And if that happens, or I think it's really a when that happens, I think you're likely to see another wave of innovation, because being able to do something in a drive chain is akin to being able to issue a token according to the ERC-20 standard. So I think that we're still in very early days, and it'll, I'm psyched to be here. It'll be interesting to see what happens over the next coming years.
Yeah, and that's one of the promises of either side chains, drive chains, Veribloq. You have all these different implementations of how to leverage the security model of Bitcoin for other chains, other applications. And once some of that gets figured out, I think we're going to see another step function change of innovation and market vibrancy on top of that, because there's a lot of chains out there that just don't have the same miner interest, the same security, and the same attention that maybe they should. So when you solve something like that, I think you're absolutely right. It's going to drive some great things.
Mm. And in some ways, are these regulations opportunities for other jurisdictions? When a jurisdiction like this, tries to frame it certain ways, are there entrepreneurial jurisdictions out there that can really get ahead of the game and provide these opportunities for their own people?
Absolutely.
I don't know if I would necessarily be innovative with legal and jurisdictions and stuff. I would look for a path that's well developed with like a Switzerland, a Singapore, Caymans. You're seeing Gibraltar, Liechtenstein, Canada now doing a sandbox, Isle of Man just coming out of a lot of work that Brian and his team have been doing there to try and develop that. And I think also serve as chairman of the Chamber of Digital Commerce. I spent a lot of time in not only in DC but around the world with regulators, giving them a better appreciation and education of this ecosystem and this technology is really important to do. So if you care about this business and this industry, whether you like it or not, I like building and investing, but whether you like it or not, you need to spend time with regulators and educate them on this. And what comes out the other end is, again, this perspective that this will drive like unprecedented investment, jobs, and a ton of innovation for a particular geography. And that's something that is starting to be better understood as you go from, again, a $10 billion ecosystem to 150, and we're just at the beginning of it. And so people are starting to realize that this could become something of consequence and are adjusting to accommodate.
Well, that's a great note to finish on. Something of consequence and the potential before us. So I would like to take the time right now to thank Bloq once again and Matt for sponsoring this webinar, and for Wayne at Tierion and Spencer at Blockchain Capital for being on this call. From the feedback I'm getting from the audience, people appreciated it, and thanks again for your time, fellas.
Thanks for having us on.
Thanks, Nolan. Take care.
Bye now.
Take care. Goodbye.
Bye.